with all the financial chatter these days, I bet you're hearing a lot about this whole dollarization thing. And maybe you're even thinking, should I be looking into that? Well, you're in luck because in this deep dive, we're going to break it all down for you. What it is, why it's suddenly so trendy, and all those potential ups and downs you really got to know about.
Yeah, it's definitely a hot topic right now, especially with all the uncertainty in the global markets. For people in countries wrestling with crazy high inflation, the idea of moving their savings into US dollars or, investments tied to the US dollar is looking more and more appealing.
Makes sense when you really think about it. In fact, one of the sources we were looking at had this really clear example. Like, imagine you're living in a place with, I don't know, say 15% inflation. I mean, your money's basically evaporating. But then you hear about these U.S. Treasury bonds. Those are supposed to be super stable. And they're offering like a 4% yield. I mean, that's a pretty big difference, right?
Yeah, it really highlights one of the core reasons why dollarization is gaining traction. The US dollar is often seen as like a safe haven currency. So when things get rocky economically, investors tend to flock to assets they think will hold their value better. And the US dollar, well, it often fits that bill.
So it's like a financial life raft in a stormy sea. But doesn't that kind of raise some questions about what happens to the economies that people are pulling their money out of?
Oh, absolutely. There's a huge debate raging right now over whether dollarization actually hurts those local economies. Critics argue that it's like draining resources, vital capital that those economies need to actually grow. They say people should keep their money invested locally, even if it feels riskier, to support their own communities.
That's a really good point. It's like choosing between protecting your own finances and potentially helping out the overall health of your local economy. Tough choice.
It is. But then the folks who support dollarization, they counter that argument. They say it all comes down to personal financial freedom. If your local currency is losing value like crazy fast, they say you have every right to protect your savings, secure your family's future. They see it as a survival tactic, not some selfish move.
So it's a super complex issue with strong arguments on both sides. And honestly, I hadn't even thought about that ethical side of it before.
Yeah, it's definitely a layer that gets missed a lot in the mainstream conversations. And here's where things get even more interesting. We've been talking about the US dollar like it's this all-powerful force, but that could shift, Global power dynamics change, new currencies emerge. Even things like cryptocurrencies could shake up the whole system.
So you're saying betting everything on the US dollar might not be the smartest long-term plan? Like, what if another currency takes center stage? Something like the Chinese yuan?
Exactly. Investors who go all in on dollarization might miss out on big opportunities in those up-and-coming markets. But hey, I'm guessing some of our listeners right now are thinking, okay, this is all fascinating, but how do I actually do this dollarization thing?
Right. Like, does it mean opening some shady offshore bank account? Because that sounds like a major hassle.
It can be. But luckily, our sources actually laid out some alternatives that are way more accessible, especially for smaller investors. For example, a lot of local stock exchanges now offer these things called ETFs, exchange-traded funds. They track U.S. indices.
Hold on, back up a sec. For those of us who don't speak fluent finance, what exactly is a yield?
Oh, good point. It's basically the return you get on your investment. So like if a U.S. Treasury bond offers a 4% yield, that means for every $100 you put in, you'd earn $4 in interest each year.
Okay, that makes sense. So with these ETFs, you're saying I could basically grab a piece of the U.S. market action without even leaving my country.
Exactly. It's a super convenient way to tap into the potential growth and stability of U.S. markets.
I like the sound of that. What about those global investing platforms I keep hearing about? Places like Interactive Brokers or eToro. Aren't those designed for international investing?
They are. And they give you more direct access to U.S. stocks and ETFs. They usually have pretty user-friendly tools, though you might run into minimum deposit requirements or have to deal with some tricky tax stuff.
So there are trade-offs no matter what. But at least there's more than one way to skin this dollarization cat, so to speak.
Absolutely. And there are even more options. Ever heard of ADRs, American Depository Receipts?
Can't say that I have. Sounds kind of intimidating if I'm being honest.
Not at all. Think of them as like a shortcut to owning shares of U.S. companies. But they're traded on your local exchange. So let's say you're interested in Apple, but you don't want to mess around buying stocks on a U.S. exchange. You might be able to buy Apple ADRs right on your local exchange and in your local currency.
So it's like a simplified way to own a piece of a U.S. company without all the international hoops to jump through.
Exactly. But keep in mind, ADRs usually only cover the most popular U.S. companies, and there might be extra fees involved.
Got it. So we've got ETFs, global platforms, ADRs. Are we missing anything?
Well, there are always mutual funds. A lot of banks and investment firms offer mutual funds that are tied to U.S. markets but managed locally. This could be good for someone who'd rather have a professional manage their investments instead of picking individual stocks or ETFs themselves.
So it's like having a financial expert make all the U.S. market decisions for you. It sounds pretty hands-off.
Exactly, though it usually comes with higher fees compared to managing your own portfolio. And
Right.
you have less control over the specific investments.
Right, the classic trade-off between convenience and control.
Precisely. And one last option to throw in the mix is a Forex account.
Wait, Forex, isn't that all about currency trading? Like something out of a Wall Street movie?
It is. But you can also use Forex accounts to just hold and trade U.S. dollars, which indirectly gives you access to dollar-denominated assets.
Interesting. So it's like a more hands-on way to manage your U.S. dollar exposure.
You could say that. But fair warning, Forex trading can be risky. And the investment choices are more limited compared to the other stuff we've talked about.
Okay, so we got a whole buffet of options here. Local ETFs, global platforms, ADRs, mutual funds, even Forex accounts. Sounds like there's a way for almost anyone to dip their toes into dollarization, no matter their budget or experience level. But before everyone rushes out to go all in, I have a feeling there's a big but coming.
Yeah, you're right on the money with that but. I mean, it might be tempting to just shift all your investments into U.S. dollar assets, especially when your local currency is having a rough time. But you know the old saying, don't put all your eggs in one basket. Well, even if it's a dollar basket, it's still a risky move.
The classic diversification advice. So even if you're feeling good about the U.S. dollar, you're saying it's still smart to keep some investments in your local market?
Exactly. What if your local economy suddenly bounces back? You wouldn't want to miss out on that growth just because you moved all your money out. It's all about finding that balance, between protecting your wealth and staying open to opportunities closer to home.
That makes a lot of sense.
Yeah.
But I'm curious, we've been talking a lot about how investors benefit from dollarization. But who else is making money off this trend?
That's a great question. It's easy to forget, but there's a whole system that profits from all that foreign capital flowing into U.S. dollar assets. Think about all the financial institutions involved. Brokerages, mutual fund companies, Forex platforms. They're all collecting fees from investors who want to get in on the U.S. market action. And the more popular dollarization gets, the bigger those profits become.
So it's not just individual companies. It's like the whole U.S. economy gets a boost.
Exactly. All that foreign investment going into U.S. dollars and U.S.-based investments, it acts like this massive economic stimulus package. Pumps liquidity into the market, makes it easier for U.S. companies to raise capital. And ultimately, it fuels economic growth.
Wow, so it's kind of like a win-win for the U.S., at least on the surface. But something tells me there's another but coming.
There's always a but in economics, isn't there? While the U.S. might be enjoying the benefits in the short term, there could be some unintended consequences down the road, like what happens if the U.S. dollar gets too strong?
That's right. I vaguely remember from Econ 101 that a strong currency isn't always a good thing. Something about how it makes a country's exports more expensive for buyers in other countries.
You got it. A super strong dollar could lead to trade deficits for the U.S., maybe even job losses in certain industries. And then there's the risk of what economists call Dutch disease.
Dutch disease. Okay, now you got to explain that one.
It's basically a term that describes what can happen when a country gets too reliant on a single industry or commodity, often because of a surge in foreign investment. And in this case, the commodity would be the U.S. dollar itself.
So all this foreign money pouring into the U.S. dollar could actually end up hurting other parts of the U.S. economy by making them less competitive.
It's a real paradox. It just shows how dollarization, while it has its benefits, also creates these complicated ripple effects that are really hard to predict. And that brings us back to the individual listener, the person trying to figure all this out for themselves.
Right. So after all this, what's the bottom line? Should everyone be rushing to dollarize their portfolios?
It's not about rushing anywhere. The key is to have all the information you need to make a smart decision. Dollarization can be a powerful tool to protect your wealth, but it's not a one-size-fits-all solution. You really have to weigh the pros and cons, think about your own financial goals and how much risk you're comfortable with.
So it's all about doing your research, understanding the nuances, and maybe even talking to a financial advisor who specializes in international investing.
Absolutely. It's like anything else in personal finance. The more you know, the better equipped you'll be to make the right choices for your own situation. Solid advice. Well, I think we've covered a lot of ground today. We started with the basics, what dollarization is and why it's happening now. And we dug deep into the potential benefits and risks, not just for individual investors, but for the entire U.S. economy.
Yeah, we even touched on those ethical and geopolitical issues that don't always get enough attention.
Right. But before we wrap up, I want to leave our listeners with one final thought-provoking question. As the world gets more and more interconnected, what does this whole dollarization thing tell us about, global financial power, and what could the future hold?
Now, that's a question that could spark a whole other deep dive. It really makes you think about the clout the U.S. dollar still has, and the level of trust, maybe even dependence, that people around the world place in it. But like we've been saying, that dominance isn't guaranteed to last forever.
Right. That's what I find so interesting about all this. Dollarization isn't just about personal finance decisions. It's like a window into global economics and politics, a real behind-the-scenes look. Exactly. It forces us to think critically about financial stability, about which currencies have the most influence, even about the balance of power between countries. Who's benefiting from the way things are now? And who might be getting the short end of the stick? And as the global landscape keeps changing, how might this all play out in the years to come?
Those are some big questions.
Yeah.
And I don't think anyone has all the answers. But by understanding the forces at play, at least we can make smarter decisions about our own money and navigate this crazy, complex world a little bit better.
Couldn't agree more. It's all about awareness, staying informed, and adapting as things change.
Well said. Well, we hope this deep dive has given you, our listener, plenty to think about. Remember, knowledge is power. And the more you understand about how this whole global financial system works, the better you'll be able to make choices that align with your values and goals.
And if this conversation has sparked your curiosity, don't stop here. There's a ton of information out there. Books, articles, podcasts, online forums, you name it. Go deeper, ask questions, and don't be afraid to challenge your own assumptions.
That's what the deep dive is all about. We're here to guide you through the complexities, trigger those aha moments, and hopefully make you a little bit smarter and a whole lot more informed.
Until next time, keep learning, keep questioning, and keep diving deep.